Welcome to Ask the Accountant, the podcast that is made for you. Weekly podcast live Mondays from 8:30 a.m., released on the podcast service of your choice on Wednesdays. Your main weekly hosts, Aaron, Patrick, and Johann Gary. Got something to ask? Submit your questions below or ask during the show. Podcast loading. We are currently getting everything set up behind the scenes, so sit back, relax, and we will be with you in a few seconds. Enjoy.
Hello everybody and a very warm welcome to Ask the Accountant. It's the 21st of November and we're on episode number 7 already. My name is Aaron Patrick and with me today as always is my co-host Johann. Johann, how's it going your end?
Good morning, Aaron. Yep, Monday, 21st of November. The month has flown by already, hasn't it? So, all good my end. Still in recovery mode after a very busy week last week. 2 days of speaking to users of QuickBooks at the small business show was absolutely fantastic, but it does take it out of you. Especially when you've got to stand for 6.5 hours on the train home because the main line's closed.
Ooh.
So, yeah, long 3 days.
And a birthday week as well, wasn't it?
Yeah, birthday on Saturday. Very quiet weekend. I felt like I'm getting old now. I went out for lunch and then sat and played with my Lego whilst watching the F1. So I got to build a Mercedes Lego car whilst watching Mercedes do terribly at the F1. So, yeah.
Probably less we speak about F1 the better at this point in time. But, there's always next season. We'll see what happens next season.
That's it. I've cancelled the sports package on my Now TV for a few months until the F1 starts back up, and I've activated the movies channel. So, ready for Christmas.
You're swimming in money then, but no, it's like for like. So,
well, for some reason, because we cancel the sports package, and we activate movies for 2 months or 3 months over Christmas normally. So I think I'm paying $2.99 a month for the movies package because I've had it in the past. They're trying to lure me back. And then because I've had the sports package this year and I've cancelled it, by the time I try and use it again next year, they'll try and lure me back in with another price. So it's normally works out quite effective with the offers.
I love it. Money saving tips right here on Ask the Accountant. Tune in next week for your next money saving tip by
Yeah, Martin, what's his name?
Yes, the money guy.
Martin Lewis. Watch out, I'm coming for you.
Brilliant. And this it has been a busy week, hasn't it? We had also our first ever Ask the Accountant We Have Called Friends. Looking forward to announcing which QuickBooks expert we brought on for that episode. I'm looking forward to that one. So that'll be good. And the location, you've got to admit, the location was pretty special.
What a venue. So those that aren't aware, we recorded our first ever Ask the Expert We Have Cool Friends, which is a bonus series we're running alongside this. We'll be doing one every now and then where we bring in an expert from the field or any field for that matter. And we sit down and have an hour-long interview with them. And we opted for an amazing venue, courtesy of Aaron's knowledge of London. So we went to the Waterloo Brewdog pub, which you think, really, a pub? But this place was huge. I mean, this place makes Wetherspoons look small. And absolutely fantastic venue, bowling alleys, podcast studio, over 3 or 4 different floors with different bars. And then a secret bar that we didn't know anything about, but Aaron knew everything about.
And you didn't believe me as well. And so, it's a proper speakeasy bar where you have to kind of do something a bit different to get yourself in there. Yeah, and you didn't trust me at that point. But we got in there in the end, and it was a good time.
Definitely thought you were just trying to make fools out of us.
I was recording at the time, so I was hoping that we weren't letting partly. But Brilliant, fantastic. Yeah, it was a great. I'm really looking forward to releasing that. We're hoping, fingers crossed, it all goes to plan in the next 2 weeks or so. So keep an eye out on your podcast services of choice, and we'll make sure that on the YouTube channels as well, going forward on that one. Another just a bit of a thing as well. It's the World Cup has started yesterday, so England play today. So hopefully, fingers crossed. This apple juice, by the way. But hopefully, fingers crossed, we get to enjoy a long campaign through that one. So I'm looking forward to that. So that's this week, and that's last week. And today we've got quite a jam-packed episode. We're going to be talking about the fact that we have a budget to talk about, so we'll make sure we bring that into play. Zero's got a new head or CEO that we'll have a quick little 5-minute talk about and try and figure out what their kind of intentions or going forward is going to be for them. And then we've got R&D to talk about as well. So jam-packed and as exciting as ever. So first of all, let's see if there's any feedback from last week's show. The only feedback we had was from Paul, and Paul says the following: love the content. Would be great to hear your thoughts on how to run your practice outside of software, how you communicate on board clients, and how you hire and train staff, etc. Johann, do you want to start us off with that one? I know you've got kind of a few kind of fingers in the pies, is that the right phrase, of how you can
you use software, Paul, if I'm honest.
Well, what software? Talk us more.
Right. So for practice management, we use Client Engager, which is a huge fan of the show, and I believe have agreed to be a sponsor of the show. So you'll be hearing Ask the Accountant, sponsored by Client Engager, coming forward soon. So we use that
for the We Have Cool Friends already ready there. So that'll be our first little push on them.
So we use practice management software for our quoting, because it's now got a pricing calculator that goes live tomorrow if I get around to filming the videos. So we'll be able to send quotes, letters of engagement, and onboard the clients through that. For training our staff, we use Loom videos. So all the different jobs are saved as Loom videos so that staff can go back and read through them. And we're currently translating all those Loom videos into PDF manuals as well, which is all stored in our My Second Brain, as all the tech guys call it, My Second Brain, but aka Notion. So we've got like a Wikipedia, internal Wikipedia, which is on Notion, which is where my employees can go in and get any information they need. If it's their first job, they can go in there. They've got written instructions. They've got videos on how to do every step. So yeah, it's all software dependent on our side. We're trying to automate as much of everything we can. So yeah, hopefully that helps answer Paul's question from my side. Anything from your side, Aaron?
Very, very similar. Different software. I am definitely tempted to move over to Client Engager at some point. There's a few things that creature comfort, should I say, that I'm very, very fortunate to have on my software of choice at the moment. But yeah, it is all about automation. It's I use Accounting Manager, and it is very, very much a case of trying to make sure, especially from that onboarding point of view, to just automate as much as possible. So we're quite lucky in the fact that we get a solution where a client comes aboard, or at least we send the proposal out for the client and they get to accept there. And then as soon as they press the accept, stuff happens in the background for them. So they get sent links and they get sent elements to it and everything else. And we're not 100% there yet, but we're very, very happy with where we are at this point in time. And it's just one of those bits that all I'd recommend is you just set some time in the diary to go and have a look at, again, fresh pair of eyes each 6 months or so. Just to go through that whole process of what the client journey looks like, see if there's anything that you could think about improving, see if you've had any feedback, anything like that. And when it comes to training clients and or training your staff and training clients as well, for us, it's all YouTube. So very similar to Loom and also StreamYard, which is what we're using to get this up and running. Very, very similar, the same technology, just different way of looking at it, really. But the idea then is we can quickly, just with a couple of clicks, put together a video, put together a screen share. That's able to be sent out and passed around easily. And then also, if we want to, we get to put it to YouTube as a more of a stable or at least long-term video as well if we need to. So yeah, it's we're definitely getting there. It's one of those areas where we spend more time than anything in terms of just re-looking at, having a look, and every time we look at it, there's always something we can change, or some little area we've not considered before, or whatever it's going to be. So yeah, it's always going to be something to keep an eye on going forward. So thank you for your feedback, Paul. That's been brilliant. And again, if anyone else has any feedback that you want to bring over to us, I've just put the links in the show notes where you can go to our little link tree and you can click on feedback and questions there. All right, let's move ourselves on to the first one. And I think we'll just talk about, because it won't be a long topic, let's talk about the fact that Xero now has a new CEO. So just a quick kind of headline of what the story is. Steve Vallos, who was the old CEO, has announced his departure as global CEO of a cloud accounting platform, Xero. He will hand the virtual reins to Silicon Valley veteran Suka Sain Cassidy, who takes on the challenge of shifting the company into its next phase of growth and innovation. And basically, Suka seems to have quite a nice little pedigree. She was co-founded data aggregate Yodel before joining Google as first general manager for Google Local Maps. So she seems to bring in quite a lot of experience with her, which is quite an impressive little resume that she's got there. So obviously Xero themselves, they've kind of got their sights firmly on maybe the American market. Could that be quite a nice, or a reason for this appointment? So what's your thoughts on this one then? Kind of out of the blue, wasn't it? I thought Steve was there, but I've never known anyone else other than Steve being the CEO of Xero. So yeah, it seems like a big shift. And they start, I think it was February 2023 officially hands over.
Yeah, I mean, as far as I've only ever known Steve in place there. I think it's a very blatantly obvious that they are going to target the US market with this person coming on board. I think they see it as the holy grail. That's where QuickBooks is based. QuickBooks in America basically prints money for QuickBooks. Sage do exceptionally well in America with their in-tax product, with their medium-sized businesses and upwards. So I think Xero see it as the next big step that will really stabilize them financially. The Australian and New Zealand markets are only so big. The UK market is only so big. So yeah, for them, I would say America, they need to make it in America to be financially successful. As that's what we've seen with QuickBooks and Sage already. Whether they can do or not, a different matter. It's a hell of a monopoly to break into for small businesses in America, where everybody knows what Intuit is. Everyone knows what their TurboTax product does. Everyone knows what QuickBooks does in America. So whether Xero can actually really break in, they've been trying it for years, but it's not really gotten them very far. So let's see what happens.
Yeah, I think it's definitely a move they need to make, isn't it? And like you said, it's questions going to be asked as if they can actually achieve it or not. And it's interesting as well over in America, because they've got quite a few emerging software that's done really well, but I think it's almost stagnated over there now, isn't it? Because you have your FreshBooks that's done really well in terms of kind of getting the name out there. They've done really well on their marketing, and every kind of decision or ones we've seen to try and break the American market, or at least get us footed in there, hasn't really succeeded, hasn't it? Maybe bringing someone on definitely it's the right move in terms of bringing her on as an opportunity. Looking at her resume, she obviously understands the American market very well, but it is definitely going to be a case of maybe a dice roll that they've got to make this work, otherwise they're going to be in trouble by the looks of it. I mean, what else can they do? Because at the end of the day, they've kind of probably got as far as they're going to in the UK market. They've obviously dominated the Austria and New Zealand market, and that's kind of their bread and butter, isn't it? Yeah. So they've got to kind of make this work, haven't they, one way or another?
Yeah, I'd say so. I mean, they've also got to take into account the amount of businesses that are setting up in Canada for general ledger software, and they like to migrate south to America quite quickly because they've got relatively similar systems. So anyone that's done well in Canada tends to then move to the US to take on that market. So things like, I think Shopify was Canadian. They've done very well out of it. As you say, it's a very saturated market with lots of players coming from different directions to target the American market. Whether Zero can make it work and they've got the funds to really make a ripple is a different matter.
Because that's what it's all going to come down to for these bigger boys, isn't it? It's all about funds now, isn't it? Like Sage, we've spoken about before, and we'll speak about many times. They've been brilliant in the acquisition market at the moment, and that's all backed by the fact that they've got the money to do that. And Intuit, they're either going to have the opportunity to acquire whoever they want if they need to, or they've got the funds to build in-house whatever product innovation is going to come their way. So if Zero doesn't have that backing and that funding behind them, they will get left behind, unfortunately. And that's as cutthroat as that market will be, is it, at this point in time, isn't it? And that's just the game that they're in.
Yeah, definitely. I mean, and if Zero go into America, Zero already in America, and I think they're pretty much level pegged, maybe slightly cheaper than the QuickBooks products in America, because QuickBooks in America is more expensive. But if Zero's financial backing is coming from investors, when QuickBooks and Sage's backing is coming from their bank account, they've got less people holding them accountable than Zero will have. And all it will take is for QuickBooks to drop their prices slightly for Zero no longer to be able to get a foothold, basically. They're going to have a hell of a job trying to break that market.
Yeah, it certainly is going to be an interesting landscape, put it that way, for them. So we'll see what happens. We'll keep an eye on it. I think there's definitely going to be interesting kind of concept. Apparently apparently Steve has been there 11 years and took over from the founder. So that's why we didn't know about the one beforehand. But yeah, 11 years. And he's led Zero from 1.4 million subscribers to 3.5 million subscribers. So yeah, not a bad 11-year tenure. I think it's the writing's on the wall in terms of how they can kind of go from there to the next step. But we'll see. At least they're making some sort of change at the top, aren't they, to try and bring that over. So we will keep an eye on it going forward. The other big news of the week, something called a budget happened. I don't know if autumn statement happened. And it was definitely and it was one of those where we'd already done so much analysis of what could happen and everything else that came through that actually there wasn't anything there or massively there that came as a bit of a surprise to it, was it? I think we kind of expected what was going to happen. A few kind of tweaks here and there that probably wasn't as aggressive as we thought they were going to be. And we'll talk about them in a minute. But overall, I think really the statement was what, compared to what the mini budget was and what that got overturned, it was far more aggressive, but it was what we kind of expected, wasn't it? It wasn't anything majorly groundbreaking that came out of the blue.
Yeah, no, I mean, I was at the business show at the time. So I was watching the clock thinking, oh my God, if I talk to this person, am I going to finish in time to be able to go and listen to the budget? But I did. I managed to hide in the corner of the QuickBooks stand, one headphone in, watching my phone, taking my notes on my iPad. And after about an hour of him talking, I kind of walked away thinking, well, was that it? Like, that was very tame compared to a lot of the rumors we were hearing. So we were hearing entrepreneurs relief will be scrapped. It wasn't touched. We were hearing dividends tax-free allowance would be scrapped and the tax rate would go up. Yes, he's reduced the dividend tax-free allowance, but next year it's only going to increase your tax bill by £87 something pence, and the year after it's going to increase your tax bill by £140 odd or something off the top of my head. So actually that's quite, compared to the, we were hearing rumors of 10% tax rates and stuff, that was quite tame. we were hearing rumours of capital gains going up in percentages and being tied to our personal allowance, which means we wouldn't have had a tax-free allowance for most people at work.
Exactly.
But they just slashed the rate down to £3,000. So there's a lot of people saying it's making life harder for them, and they're going to pay more tax. And there's a lot of this phantom stealth taxes where, because of not increased the tax-free allowances or the tax thresholds, more people are going to fall into the higher threshold than they are now because their rates of pay are going to go up in line with living wage, etc. But overall, it was a tamer budget than I think we were potentially going to expect based on all the media coverage we had beforehand. I mean, Jeremy Hunt said beforehand there won't be any white rabbits in this being pulled out the hat. And to be fair, there wasn't. There was nothing pulled out the hat that we didn't expect.
Yeah. I mean, we were already kind of expecting the pain anyway, weren't we? It was already going to happen. If you think back to Rishi's last budget that he brought in, and he brought the raft of changes that are now coming into effect. So the idea that we're having an increased corporation tax for higher businesses, and the fact that we've got to be careful about making sure that what our group structures are going to be, and we've got to really be careful about those sort of things. We already knew about all those sort of pains and difficulties and issues that clients are going to be facing going forward on it. So it was kind of just, there was a few bits there that, like you said, that were coming out of the were being less aggressive than we thought they were going to be. As you've already mentioned, capital gains tax and the dividend taxes that we thought were going to be really, really attacked. I was just a little bit like, okay, is that it? And we will go on to the R&D one in our second part of the kind of talk about it. And I think that's the one where there's a bit more of an essence there. The electric vehicle being taxed on it, well, that was going to happen, wasn't it? It was just a matter of time. Yeah. Probably a little bit accelerated than what we probably would have expected, but it was going to happen. It's going to come in at a lower rate anyway, so you're still not going to be paying that much of road tax going forward if you have an electric vehicle.
Yeah. That, and with that one, like he's using the justification that by this point we expect 50% of cars on the road to be electric. I would argue actually that would have happened a couple of years earlier if it wasn't for COVID and supply issues for microchips and stuff like that. So if it wasn't going to happen then, it would probably have happened if it wasn't for COVID. This would have come in sooner anyway, because a larger majority of cars would be electric that are on the road. So yeah, it was inevitable.
It was, and the benefit in kind one, we expected that as coming in at some point. It was never going to be as low as that forever. And again, it's incremental increases that are still making it quite attractive for people to have electric cars in their business. So the messages that we will be giving out to clients hasn't really changed. The interesting one I thought though was, and I suppose before I go on to that, the other change was national minimum wage increase, but we knew that was coming. That happens every year, and it's I
mean, 10% is a big step up for employers that are already struggling, but
but we knew there was going to be an increase. Yeah, maybe we didn't expect it to be this high, but we've always had that conversation topic with our clients about, can you afford your first member of staff? And it's always a very difficult conversation topic and can you continue to invest in staff, because staff has increasingly become one of the most expensive, or will always be the most expensive investment a business can make. So that was always kind of expected, but on the cards. I think the bit that still, or the rumbling that I've seen on social media and the conversation topics that seem to be dominating this is, does this mean then it's time for us to move over to the fact that small business owner managed businesses should be on the whole salary? We spoke about it a little bit last week about the fact that we think that it's Rishi's got his vendetta against small businesses taking dividends and relying on that fact that it's more tax efficient and everything else, and he wants to close that gap. Hence why he's slashed dividends in terms of the allowances that we can get from them, so that people can get less tax-free dividends out of their business. But it does seem like this is the time where conversations need to be had more than ever in terms of your clients about, well, maybe it is time to start taking a salary, maybe it is time to start going down that route. I think this budget just reinforces that, doesn't it? That there used to be, you know, a tipping point of if your business was profitable or not, then that's kind of the decision of should you be taking a salary or should you not. If you aren't profitable, then, you know, and you're going through kind of an investment phase of your business, then definitely consider taking salary. Otherwise, you can't take any money out of the business. So salary is better than nothing. But now I think it is definitely time to have that conversation. And I've seen a lot of chatter on the socials at the moment about doing kind of, you know, Excel spreadsheets and looking at forecasting and everything else to decide what's more cost effective and what's more efficient. But I think nowadays, you know, the difference between the two isn't that great. And actually for clients who are very, very, very focused at the moment on survival and their monthly costs and everything else that goes with it, and actually if we can get majority of their taxes on a monthly basis and they're paid by PAYE as opposed to one-off lump sums in form of personal tax and corporation tax, and actually I'm thinking a lot of our clients where, yes, it might be marginally worse off in terms of their tax, but they're going to have a much better, you know, time of it in terms of being able to not have to worry about their tax bill as much and not have to worry too much about, you know, month to month how to have to save and making sure they've got enough money at the end of each year and everything else. So I think those conversations are going to be individual for each and every client, but I think there's more and more reasons now just to go, right, let's put you on salary and let's make it easier for you going forward.
Yeah, I mean, one of the questions we now always ask any of our limited companies when they're looking at this is, it's a gamble. It may never happen again. However, just remember, if you were taking a wage and they had to bring furlough back for any reason, you would be protected and you'd get a percentage of your wage. If you're on dividends, you won't get anything. The precedent has been set. That is the case study sorted. Now, it may never, ever happen again. You are gambling as to whether it will or not. But that's not a decision your accountant can take for you. That is a personal decision that you need to make as the business owner as to whether you want to protect yourself in case it does happen again. Then you need to go onto a wage. If you aren't convinced it will ever happen again, then that's fine. Take dividends. It's marginally better, but you won't have this protection in the future if it ever happened again.
Yeah, and that's a really good, you know, point of view to be looking at it, isn't it? It's trying to look at the future and try and predict and try and make sure that you're not going to be left in the lurch, which was the case for a lot of small businesses out there. And it almost felt like, well, it was done deliberately, wasn't it? It was that whole idea where, you know, you've had it for so long of having great tax relief and tax rates and having a more efficient way of taking the money out that, you know, maybe enough is enough. So it's definitely what the government are after. They would prefer you all to be on PAYE and not having the whole small salary and large dividends debate. So yeah, maybe it is time just to take that jump and push them over to it. I don't really know what else you can tell clients other than, you know, it's got to be ultimately down to them. And I think that was one of the, when COVID was hitting and there was kind of the first raft of furlough was coming out and we were finding out that directors weren't going to be protected by it, there was a bit of a worry in the profession about, well, have we been promoting this too much? Have we put it too strong? Where for some clients, they didn't really understand it. They were just accepting that, oh, that's the way we do it. You know, that's how we pay directors these days. And it was a case of, there was a worry there that accountants were pushing it on too strong. So I think you're right. I think you have to give the clients that decision and you have to talk to them about those facts. And going forward, I think us accountants, we have to take a step back and not be so forceful, in want of a better word, in terms of what's right or what's wrong. We've just got to give them the facts and opportunities and let them make the decision, because ultimately that's what should have happened from day one, shouldn't it?
Yep, definitely. Yeah. It's just giving them the information so they can make an informed and educated decision on their own accord, really. Yeah. Because
I was surprised that there wasn't more of a fallout over that one. I think we had one client kind of said to us, like, I'm not 100% sure why I was ever on, you know, dividends and salary. when we explained it, they understood. But yeah, it was, yeah, I was surprised that not more kind of backlash came from that from clients to accountants. I think that's pretty much it from the autumn statement. There was the talk you heard about the business rates and everything else. That was December. We're going to find more information about that, wasn't it?
The energy bill support.
Yeah.
So the government has announced what we're going to get as individuals in our homes, which is a cap of £3,000 for the average user. But if you use more than the average user, you'll pay more. The business support has not been decided yet. It will be reviewed and published in December, ready for April onwards. So we've still got plenty of time to plan in. I think they just want a better understanding of what the markets are going to do by December.
Yeah, makes a lot of sense on that one. And apart from that, really, it was just the R&D side of things, wasn't it? That the kind of headline topics that we can talk about, and we'll use that as a good segue into our next topic and our next section. So, research and development, R&D. Basically, for those who aren't fully aware, it is effectively a nice tax incentive to incentivize businesses to go out there and actually put investment into exactly what it says on the tin, research and development. And historically, it's always been something there that there has been some really good tax benefits from it. Either you can have what's called enhanced costs or losses, or however you want to look at it, where basically for every pound that you spend, you could have an enhancement of what that pound's worth going forward. Or you were given the opportunity to actually take a nice tax credit. So even if you've paid no taxes at all, you had the opportunity to actually get a tax influx into your business, and you have the opportunity then to have a bit of better cash flow the whole point of the scheme was to help fund that research and development, to help give you some money back so you can plow that back into whatever it is you were researching, whatever you're developing, and then it was to help incentivize and grow there. So research and development has always been one of those areas where it's a very specialist area, and from our point of view, we don't take it on for every single client out there. There is a handful of our clients we have and utilize it, but for those clients who have it, and definitely in our point, we've been very careful and understanding with them, and we've made sure that they get what's called advance assurance, so that they, go to HMRC first about whatever research development claim they've got and what their idea is and what their whole process is going to be to bring this to fruition and bring this to market, whatever it is they want to do, from a new piece of software all the way to new, advancement in technology or whatever it's going to be. And we've kind of been working with our clients to make sure that, they're legitimate, they're, as I said, advance assured and everything else. But unfortunately, that's not what's been happening for a very large percentage of the R&D claims out there. And unfortunately, it has been a case that a lot of the R&D claims that have been made have been, fraudulent is probably the best word to use. And the whole idea there is that the changes that were introduced during the budget, and also changes that have happened recently, are all trying to stop that from happening. What was the really sad state of what R&D was at the moment, or previously, was the fact that claims were being put in, HMRC were just paying those claims because they didn't have enough staff to actually look into them in any great detail. And then 2, 3, 4 years down the line, when HMRC were able to actually investigate it further, that's when they found that they were not legitimate claims, and that's when they were having to recoup, and they weren't being very nice about it either, which you can understand at that point of what's happened. And unfortunately, it was a lot of rogue R&D specialists out there who were kind of putting in any old claims just to get them through the door and to get the money, and it became quite a toxic environment for clients involved, where they were putting, they were thinking they were getting this wonderful tax rebate or tax refund, and actually found out that they were being asked to pay that back. And then these R&D specialists were gone and never to be seen again. So HMRC had a difficult decision to how to rectify that, because obviously they want to still incentivize the legitimate businesses out there for making these investments and putting the money into bringing it in, and making sure that as a nation we are as advanced as we could be in terms of research and development and pushing that envelope forward. But they had to find ways in which to do it. And during the statement, autumn statement, they did make some changes there, which again, to me, I still aren't 100% sure of what their full intentions are, but effectively they've basically for that idea that you can get a refund back, they've reduced the amount that refund's going to be available to you, so they've reduced that down, and then basically made it so it's more attractive now for you to not take the cash, but instead to actually carry it forward as losses or enhance losses going forward. That's kind of what was brought up in the statement. We know there's some other changes that have happened into the way it's being claimed, and I think that's really the bit where you can see the idea is to stop the fraudulent, stop the the R&D that shouldn't be being claimed in the first place. But what do you think so far, or what do you think at the moment about the changes that have been implemented from the autumn statement? Do you think it's going down the right path? Do you think that's something that could probably help the situation we're in at the moment?
Yeah, I mean, as you say, they're trying to disincentivize you from taking the cash up front. They want you to take it as a credit against your next tax bill, in effect, rather than them sending you a check in the post. So yeah, that makes sense, because if you're a genuine long-term focused business, then that's doing R&D, then you will see the advantages of carrying forwards the balance at a greater rate than you would have got from the cash, and having that offset against future tax bills. But at the same time as changing those rules, he did increase the budget for R&D payouts. I think he's upped it to 20 billion now, with plans to get it to 40 billion, something like that. So yeah, look, they do want this to happen, and they are increasing the budgets for it to be paid out. But they are definitely encouraging people to do the RDEC system, which is where you get the credit and it moves on paper, basically. It's not a bank transaction or cash or check deposit, which makes sense, I suppose. And we have seen a lot of companies that are almost reliant on R&D tax credits, whether they've got a genuine claim or not, as cash flow. They need it urgently. And HMRC have kind of slowed down the payout process as well, just to make it very clear that you shouldn't be using this for cash flow. It is a bonus. So yeah, and ultimately the market has been flooded by these R&D experts that I don't want to tar them all with the same brush. And there are some fantastic R&D experts out there who genuinely know the rules and know what you can and can't claim for. But a lot of these R&D experts, if you look back at their CV a couple of years ago, were GDPR consultants. And before that, they were probably payments protection claims specialists. It's whatever the next bus is to get on, basically. And they are telling people that they can claim for very tedious links, shall we say. So yeah, I mean, we're operating now in the same way as you, Aaron, that we'll support any clients that have got advanced assurance from HMRC, which is basically a pre-approval of their claim. They agree that the plan and the ideas are genuine R&D claimable projects, and they can move forwards with that. And we're also getting a lot of clients now say, you know what, we're not interested in claiming again, because the risk of investigation has gone up, which is time consuming, even if you've got a genuine claim. The HMRC's tactics have changed, so that you have to, their investigator insists on speaking to the named person on the R&D claim as the expert, and they cannot be coached and aided by an accountant or an R&D specialist. Having said that, try and find your R&D specialist when they've got an investigation. They disappear very quickly. But the client's like, have I got the confidence in my own knowledge and in what we're doing and the figures to sit there and be interviewed on a one-to-one basis? A lot of clients are going, no, thank you, I don't want that. And then HMRC aren't just investigating the big claims anymore. I've recently heard of a claim where the business got paid out £650 in R&D tax credit. HMRC spent 3 months investigating that, backwards and forwards in with emails and phone calls. HMRC found in favour of that claim, like it was fine, it was genuine, but with the amount of time that that business owner, the accountant, and HMRC spent on that investigation, that fee that the accountant got and the amount that the business owner got was no longer worth having because they'd wasted so much time afterwards in the investigation. So yeah, we are having some very frank and honest conversations with our clients about the validity, whether their claims are valid and whether it's worth the risk in the long run. And I suspect that is exactly what HMRC are aiming to achieve out of all these changes. They want only valid claims going forwards. They want to get rid of this cowboy image of the R&D market that is out there. Yes. So yeah, if you've got advanced assurance, then great, that's fine. Next April, you've got to send a detailed report in with your claim so it can be reviewed. You didn't used to have to send that in. A lot of places were doing the report only if an investigation was flagged to make them more profitable. But yeah, I can understand why they're doing what they're doing. It's great that they've extended the budget to be able to pay out even more and encourage more R&D. But at the same time, what they're doing is making it a more genuine and bulletproof claiming system, which is fine. I get why they're doing it.
Yeah, and like the whole premise is that we want to try and invest in our businesses and our UK businesses and try and encourage people to come over to the UK, aren't we? And R&D is definitely one of the things that could be a decision factor in moving people over. It's the same with the film industry, isn't it? And having the film tax credits. Yeah,
film tax credits has been a hugely successful program for the government. I'm in Edinburgh, so the amount of times we see streets closed in Edinburgh because someone's filming something somewhere, like the new Batman film was filmed in Edinburgh and Glasgow. Yeah. Outlander, there's Netflix have a Christmas film that they close the same bakery for every year to film the next year's with a version of that film. And the amount of revenues local councils get from that is phenomenal. That's really supplementing their income on top of your council tax and your business rates to enable them to continue developing and delivering the services that the council deliver. So if they can get the R&D thing to be as successful and as bulletproof as the film industry one, then they're laughing. And I can completely understand why they're doing it.
Yeah, because I was lucky enough last week to be on a film set for a client, and the opportunity there for me to kind of sell the services as I was there. But I was so like flabbergasted by how many people were on set. We're talking like 50 odd people on a set for an indie film, an indie project. And you think about how much money that's bringing into the economy in terms of paid work and people coming in and taking new opportunities to further their career and everything else. So you're right. If the R&D can be anywhere near as successful as that, then it makes sense. And I think that's where it kind of frustrates me a lot at the moment in terms of what R&D is. And like you put it really well there in terms of like the cowboy image that it's got at the moment. For all the, hopefully we do good work in terms of helping our clients and the right clients get the right R&D at the right time. Again, say again, we use advanced assurance. We won't touch R&D without it because we want to be upfront. We want to make sure that clients are, more than anything, they know that they can then rely on that money coming forward. But when you think about it, that even with our clients, we've had clients take on R&D from other firms before. Well, they weren't even firms. They were just again, don't want to tarnish people, but they were people who were not exactly putting the right claims in for on behalf of clients. So there's no win, no fee sort of idea. And our clients didn't even ask us about this and just went ahead with it in some circumstances. And we've then had to fix out all of those issues. And the idea of HMRC bringing in these new measures to try and make it so it's more difficult to actually put in, I don't think that's quite what's needed. The CT600 itself, there was a whole change, or there was a whole element where they were going to change the way that the CT600 was prepared for research and development, so the tax return itself. And there was a whole new page being allocated to it, where the idea was that, again, let's try and make it so it's much more only the legitimate R&D people or the legitimate companies who can claim R&D can claim it. And there was this whole reform of it called the CC600C, I think it was, off my head.
L,
that was it, yeah. And the idea then would be that, let's make it really complicated so that, unlegitimate clients or unlegitimate businesses can't claim for it. But even that was kind of half-hearted attempt, and it just became a box-ticking exercise, which never really went into the details or the legitimacy of it. It just made sure that, I suppose, the numbers were more accurate than they've ever been before. So, yeah, I suppose we're getting rid of the errors and that could cost cost HMRC in terms of over-claiming and everything else. But these, being insistent that you provide the reports and everything. Well, if we look at the scenarios that even in our firm, well, that one who created this R&D claim out of thin air, well, they had a more detailed report than we've ever put together. It's just that the report was absolute nonsense and made no sense whatsoever. But it just becomes a really difficult situation or issue. I suppose my only criticism of this is that, again, if we look at the legitimate ones, and I understand that whole concept that they shouldn't be relying on it from a cash flow point of view, but the idea of giving them that cash credit was so they can reinvest it and push it back into the product and enhance the product further. That was the whole point of giving the cash incentive over carrying forward the losses. And if you look at the numbers that have changed because of the budget, you're going from, I read somewhere about 100k worth of qualifying R&D expenditure gone from something like 33 down to almost half. It was like 16, 17, 18, something like that. So if it's that drastic in terms of how much it's going to be reduced in terms of the cash that it can be expecting, well, that could be the make or break of that project working or not working, because the whole point of these R&D cash credits at that point was to make sure the project can get over the line. So it's a shame that we're in that position where, because of the bad eggs out there, the good clients and the good businesses and the ones who are looking to do R&D for the right reasons, to improve some sort of sector or find a solution for a problem that we're having, and and ultimately they're employing really clever people and really good people to bring that project over the line. They're the ones who are ultimately going to suffer. And I think that's the bit that frustrates me the most, is the only way we can solve this issue is to just blanketly make it so that everyone suffers. And that's where I feel like it's a little bit unfair at the moment.
Definitely.
So but we'll see how R&D kind of goes going forward. I think one of the things that we've seen a lot in the industry as well is, going back to the goodness of it, is that there've been a lot of good R&D kind of product services out there and vendors out there. You look at Accountex, you look at all those. There's been some really good R&D specialists come on the market to help take that burden off accountants, haven't they, and bring that in. So maybe with more people like that, and as long as the cream rises to the top and the good ones are still up there, then as long as we've kind of got those to rely on, we might be in a better position going forward in terms of how R&D is gonna pan out.
Yeah, no, I couldn't agree more. The better they make it, so it becomes more genuine, and then brilliant. Because I know a client who's got investment for R&D for an R&D project because he went and got advanced assurance. The investors weren't going to touch him until he had that. It's got its place and it can be fantastic. It's just been abused recently, and I think that's just what the government are reacting to.
And heavily abused, hasn't it? And that's the problem. Yeah, exactly. Which is a shame to everyone. Okay, let's move over to the questions area. Remember the feedback side of things, though. So if anything we've just said there about R&D was absolute nonsense and rubbish, do let us know. Use the feedback section to let us know what's going through. We've had some comments that I've completely missed, if I'm honest. Got too much on my soapbox about R&D. Paul says, left himself open to a Labour beating, which the media have latched onto, which was unfortunate. Couldn't agree more. So that's relation to the budget itself. It seems very much.
It matters what he said. He could have said anything he wanted, and the Labour would have found an angle to attack him on. So that's just politics. So we'll move on from that discussion.
I suppose your head of state is also licking her lips at the same time as well, isn't she? But again,
Oh,
we'll move on from that one. Another nail in the single director limited coffin, maybe. Well, it certainly seems that way. I don't know. Actually, no, I don't know if it's a nail in the limited. I think the limited company will still be around. It's just how we remunerate our directors going forward. It's going to be completely changing, isn't it? In terms of it, realistically, having a limited company should still and will always be down to if it's right for them. If it's the limited company protection that they're after, and go from there.
If you pay yourself for a PAYE as a sole limited company director, life's a lot easier personally. Like, it's easier to get a mortgage. It's easier to borrow money. It's just a lot easier because banks and stuff understand PAYE and they see it as a consistent, reliable income, whereas they don't like dividends. So there are other benefits that you need to weigh up, and not just a tax saving. Yeah.
Without doubt. And also there's, it just makes it so that you've got that opportunity to be a bit more understanding of what your personal finances are going to be as well. I mean, it's a lot less topsy-turvy than what we've had in recent years. LinkedIn user, hi Aaron, lovely to see you there. Well, thank you very much. And then final comment was, complicated forms government and council use don't work in the world with the internet. There's always somewhere to find the answers. Very true, especially when people do YouTube channels on how to complete those forms and take information from QuickBooks and put them straight into those forms as well. So yeah, we are to blame, unfortunately, on that one.
But we take genuine information, putting it on the forms in genuine places for genuine reasons. We don't turn around and say, if you do this, if you stick this on this bit, that's going to make this happen. There's no underhand, under the table dealings on our YouTube channels.
No, definitely not. Unless you want to give me bounties, and then I'm open to anyone. No, okay.
So this team are open to corruption through bounties.
The best chocolate in your celebration box. One point I did just realize I missed out on, just as a quick one to bring up, in when the annual investment announced. So there was actually some good news about the fact the annual investment is going to be staying around forever. So people who do not know what annual investment is, it's the idea that when you buy a new asset, you have the opportunity to claim 100% of it in year one, and that's good news all around, because it just makes it so much easier to do your tax computation. So the longer that we keep AIA around for, the better for us in general. Although saying that, I suppose that also makes people like the fixed asset net tracker, they'll probably want it not to be AI going forward. That could be a nice little spin that they could bring into it. But yeah, unfortunately there, Ash, the government didn't help you out on that one. Okay, so we got a couple of questions that came through. So we've got time for one, haven't we? One question to come through. We dealt with that one last time, so we'll just get rid of that one. So what are your thoughts on clients investing in crypto and ISAs? Do you charge extra for this? What software would you recommend, if any? And do you pass this on to a financial advisor instead? Johann, you want to go first? So
investing in crypto, stocks, shares, anything is outside of our remit. We always tell someone, if that's what you want to go and do your own research, or go to a financial advisor. Ultimately, crypto is like any investment. It is a gamble. It may work, it may not. You may make money, you may not make money. It's not much different than buying a house. If the market crashes around you, you're going to lose the money. So yeah, we always tell people, if they want to invest money, they need to speak to a financial advisor. Even if that advisor can't give them specifics as to which Bitcoin to invest in, they can give them a financial picture for the next 40 odd years of their personal finances and let them know how much they can afford to invest and lose, because that's ultimately what you're considering. So yeah, I'm not a fan of crypto myself. They make it all up to this hype thing, when actually all you're doing is no different to what we've been doing with currency for the last few hundred years. Of, if I spend £1,000 and get $1,500 today, and I sell that $1,500 in a year's time and I get £1,500 back, I've made a £500 profit. That's all I'm doing. I'm just doing it in a less regulated zone where there's less proof of currency, of exchange rates, etc. And a lot of people like to think it's sticking it up to the government, but it's got bigger risks because of it. The dollar, in theory, is not going to collapse overnight. What we have seen is like one exchange. Was it FTX?
We said about the pound.
Oh yeah, FTX, I think it's called, collapsed overnight, crippling Bitcoin values, and people have lost money left, right, and center there. It's gambling ultimately, as any investment is, and the longer you can afford to be invested in something, the more likely it is to be successful. But ultimately, always go and get a financial advisor's input would be my word of advice. Don't take advice from people on TikTok and YouTube, and by all means listen to them to do your research, but go and speak to a qualified expert that's been recommended to you. Yeah. Some bloke on TikTok, he probably never spent a penny on cryptocurrency himself. He's just worked out the markets and talking about it and got an audience to do so.
And ironically, probably been sponsored by FTX, which was a lot of the cases, unfortunately. Yeah, I completely agree with the fact of getting the IFA. That is very, very, very important to do. Selfishly, from my point of view, if we can find an IFA that also gives nice annual reports, that is an absolute golden egg and golden winner. And the biggest problem we've had lately with all of this influx of crypto and stocks, because not just crypto, it's the fact that I think a lot more people have been welcome to, or eyes have opened of how stocks can be, especially for the boom period. Obviously now they've less likely to be investing at the moment. But when it was going boom with your Teslas and everything else that was going through, then we had a lot more people investing in crypto, investing in stocks and everything else. And it is fantastic to see, because it's good to see people diversifying their income and, increasing their personal wealth. But from a tax point of view and from a personal tax point of view, it can be an absolute hellhole if not done properly and not done the right way. Because what you'll find is clients are just using all these different services these days. They're not having to have an IFA, or not seeing that the value in IFA, should I say, an independent financial advisor. So they're going off and just putting it into their own portfolios and everything else, which is absolutely fine. And not necessarily saying everyone out there should have an IFA and go through there, but it makes it so much difficult for us accountants to then get basically back to what actually happened within a tax point of view. And with the back to the ultimate statement, with the fact that we're now seeing a reduced amount of capital gains allowances being there, that means more people are going to be caught by capital gains than ever before. And if that's the case, then we have to go through and try and figure out how to get the reports. I mean, even myself, I've had to sign up to Binance and Coinbase and every single other solution they're out, and I've put £10 worth of Shiba and Dogecoin, all that sort of stuff, just to be on the platform, just so I could then understand what reports I need to download, so I can tell clients that please go into your app and download this report and download that report and go through from there. I think that's where it's becoming really tricky, is there's no centralized way of being able to go, right, this is what your stocks and shares were, this is what you've sold, this is what your crypto was, this is what it's sold, and this is what the capital gains element's going to be. Because it is becoming a part where we've got to, as accountants, we've got to figure out at what point do we have to charge additional for that sort of work. And that sort of thing, historically for us, it's always just been part and parcel of your tax return. It was just, it was just part and parcel of that fee. You win some, you lose some with clients. Sometimes there'll be lots of work, sometimes no work to be done. But now, with the amount of small transactions that are happening, and we've got to try and record that from a capital gains point of view, that makes it really tricky to kind of justify it. So, yeah, I know that if we go back to Accountex and everything else, there was a lot of software on show in terms of ones that could, look at this and look at that and everything else. But ultimately, a good Excel spreadsheet is all you really need at this point in time. But it's just about getting that data, and each platform's different, and each platform has their own little quirks on how to get that data in. So, yeah, it's we don't have a magical answer for it yet. I don't think anyone has found a solution that can make it easy. Really, we've just got to because every platform is different. So I did spend quite a while trying to see about taking QuickBooks and playing around with it and trying to find that as an active way to be able to record these transactions easier. But it's not really designed for it. So you end up spending more time than you do anything else. So we shall see if anyone comes on board. And maybe the best software is already out there, but we've just not come across it yet because it's a market that's absolutely saturated at the moment with different solutions and everything. So we'll keep an eye on it.
They're all too new. Like, we know Xero, Sage, and QuickBooks and Free Agent are good at what they do because they've had time to prove it.
Yeah,
a lot of these crypto stuff is still new to market, and you don't know what's going to last, what isn't going to last. You don't have longevity there. But yeah, I was speaking to a client a few weeks ago. He's made £4,000 profit in crypto, so he's fine because he's out of the game now. And his tax-free allowance for capital gains is 12 grand or whatever it is. So he's fine. But actually, if he'd sold that next year, he'd have been paying tax on some of that.
Yeah.
And I think that's potentially why they've dropped the threshold so low, is to try and capture some of this gain from crypto and shares and stocks that people are doing quite easily through apps on your phone.
Yeah, because ultimately, if they're going to sell a property or something, then yes, they're going to, but they don't do that every single month. Well, most people don't do it every single month or year, do they? It's a once in every blue moon. But yeah, crypto and stocks and shares is happening on a regular basis. And again, it's because of YouTube, TikTok, like you said before. It's become almost the done thing to do, and people are seeing all these gains and everything else, and like you said, they're not seeing the losses, but they're seeing all the wonderful gains that are being made. So, yeah, it makes sense, doesn't it, that they go there. And these platforms and stuff, they're never going to be open banking or anything, are they? Because that's the whole point of them. So the idea of them being able to connect to something like QuickBooks or something and having a one solution fits all probably is never going to happen. So,
no,
unfortunately.
No, definitely. But yeah, and at some point, HMRC will contact these suppliers, and get access to their client information. Was it Coinbase? There was a company not long ago in crypto world who, as part of a deal with HMRC to reduce their tax bill, which they'd not known about, as it were, agreed to hand over all their customers' information and what they'd invested and what they sold for, so HMRC can work out who owns the money for capital gains. Uber seems to have just done a very good deal where they are paying half of what people expected them to pay in the VAT issue they were dealing with. And I can only assume that as part of this negotiations, they've agreed to hand over all their drivers' information along with how much turnover each driver's made, and HMRC can verify whether that driver's told them about it. Same happened a few years ago with Airbnb. Airbnb had a huge tax bill because something changed, and as part of the negotiations to get that bill down and give them time to pay, they agreed to give over a list of all their clients' information who were renting properties out on Airbnb, and then HMRC went through that whole list to make sure that all of those people had declared that income appropriately to them through tax returns. And if they hadn't, they started reaching out to them. So HMRC have these tactics, and they will happily negotiate a better deal for the information holder so that they get hold of that information. So do not think you're protected, because HMRC will just issue a court order or ask for a court order to be issued for that information if they want it.
Yeah, definitely. And they've pushed more on these platforms to be more responsible anyway, haven't they? It's like eBay, for example. eBay are very, very hot now on if you get anywhere near that VATable threshold or even the income threshold, and they want to know your UTR number, VAT number, etc., etc. And that's the way it should be done, isn't it? Like, these platform holders should be held accountable, and the only way HMRC are going to get through to them is say, right, well, you're liable for that tax that's not been paid by your user. So I'm all up for it. And well, I'm not sure I'm up for the reduced tax bill, but I think that's one for another striking a deal with HMRC and handing over data. I'm not 100% sure I'm comfortable with, but hey, yeah, you know, at least we've got some money in the coffers anyway, haven't we? You know that you know that borrowing cost isn't going to pay itself, is it? At the end of the day. Yep. Awesome. All right. Well, I think that's it then. If there is any more questions, don't forget to use that question link that we've put in there. And great to see Zoe on there as well. Thank you very much for joining in the conversation. Yeah. And with that, I think that's it for today. Johann, have you got anything you want to plug, push, talk about? Anything else for this week, or have you got more of a quieter week than last week?
I've got a quieter week, thank goodness, this week. However, I will be at Accounting Web Live conference next week. I was planning on attending anyway, but I've now been invited to go and be part of the QuickBooks team there to talk to accountants about how we use it in practice and the benefits to them. So if anyone wants to meet me in person, feel free to come along to Accounting Web Live next week on the 30th of November and the 1st of December and come and shake my hand. It was lovely to meet so many people that knew who I was from LinkedIn or our podcasts last week at the business show. And the QuickBooks team were getting quite envious at points. Like someone would walk over to someone and say, "Oh, is there anything I can do to help you?" "No, I'm just here to see Johann." So yeah, the world of celebrity.
How many cactuses did you sign?
None.
That's what you want to do. Bring a cactus along next time and get that signed. It'll be worth a lot one day. Wonderful. No, it's good. It's good that you're having a more quieter week this week because, like I said, Accounting Web next week is going to be another busy one, I'm afraid. Although it's not quite as far for you to travel, is it? Birmingham as opposed to London, but then again,
Coventry. It's probably about an hour less.
Is that all it is? It's just save an hour.
Wow. Go down the west coast.
Wow, awesome. All right, awesome. And in my world, it's pretty much the same again, although I do have quite an exciting Friday planned where we're going to get the team together for a bit of a strategic day. Nice. In Birmingham of all places. So yeah, we do a bit of a tour around the UK when we have our strategic days. So this time Birmingham, so that'll be good fun to get to understand exactly how we can take our firm forward to that one. And I'm in London again on Thursday. In fact, I've been in London now for is it 4 weeks on the trot, and it's going to be 5 weeks on the trot by the time. Yeah, not fun, but yeah, we've got to do these things, haven't we? We've got to do these things. All right. Well, with that, everything. Again, if you have any comments, any questions at all, please use that question box that we've just put in the links just below. Don't forget to get or listen to us live on Mondays at 8:30 if you listen to the podcast at this point in time, where you can join in the fun and ask questions as we go along. And with that, that's it. We're live each Monday, 8:30, I've already said. Links are ready to submit questions. So with that, it is a goodbye from me.
And a goodbye from me.
Cheers, everyone. We will see you all next week. Bye.